Welcome everyone to this bi-weekly webinar. In the middle of summer, we went from 95 degrees yesterday to 65 degrees today. That is Wisconsin summer. So great to see you all back here again. There's a lot going on. The theme today I want to bring up is stick to your plan. We want to make sure as we go through, we stick to your plan. What's important about this, and I want to make that the theme because it's easy when things are good. It's easy when summer is going on to just kind of disregard it and throw things to the wind. But this is when discipline is extremely important to your long-term plan. Again, we don't have a lot of short-term retirements here. I know that's not your goal for many of you. But I just wanted to reiterate that as one of our biggest go forwards. And nobody's jumped ship. None of that has occurred. But I just wanted to be proactive about this because I've seen it when people get a bit lackadaisical. So one thing I like to do is to go big. We had my sister-in-law was up here just recently for the 4th. I want to celebrate also show my gratitude for celebrating the Independence Day that just occurred and all those who made our country free. I saw the July 4th parade up in Cedarburg, and Jerry Smith, one of our longtime clients and friends, had his cadre of Vietnam vets walking as well. I got to go out and give him fists, and I really enjoyed. My favorite part is actually clapping and applauding the World War II veteran that shows up, or two. Very few left, but there's few. So we'd love to show them honor. That's the most important part, for instance, of the program that I enjoy anyway as well. So to all those who allowed us to be independent and remain that way, I just want to make sure that we salute all of you. Thank you very much for your service. I know we have many days to do it, but this is an important one, at least on my side as well. Gratitude. How about yourself, Ken?
Good morning, everybody. Great to be here with you all. My gratitude. Chris said it really nicely on the veterans. That was really nice comment that Chris made there. I feel the same way. I'll say friends. You know, I got together with some friends over the weekend for the first time in a long time, and I'm telling you what, I appreciate my friends even more. I'm sure you do as well as you reopen and re-engage with people. Doesn't it feel good to hug somebody? Doesn't it feel good to give someone a handshake again? I mean, it just feels so wonderful. So absolutely grateful for a very simple thing of just that simple touch like that, and also having wonderful friends, and I appreciate them. I forgot, you know, sometimes you see friends, you see people, and you know, sometimes they get on your nerves a little bit over time. But I think I've gotten past that, saying, you know what, I really appreciate these people because I haven't seen them for like a year and a half. So again, I'm just absolutely grateful for friends and family and all you guys. It's really great just to be back seeing people again. And I look forward to seeing each and every one of you hopefully back in the office very soon. So.
Awesome. Thank you very much, Ken. How about yourself, Zach?
Thanks, Chris. As always, a lot to be grateful for, but specifically today, really just a great Independence weekend celebrating with family and friends. And even though we're reminded every single day of all the things wrong in the world and especially our country right now, I'm just extremely blessed to live in this amazing country and have the opportunities that we have. And as a big sports fan and especially sports history, just extremely grateful that the Bucks have the opportunity to play in the finals for the first time since 1974. Amazing to see the support that the city of Milwaukee and the state brings, and how it brings people together as well.
Awesome. Thank you very much, Zach. I totally appreciate that. So a lot of you, I'm sure, have been eating really well during this wonderful July 4th timeframe, and that'll probably break your diets and do crazy kind of things. But I did have a question. If two vegans get in an argument, is it still called a beef? Kind of odd, but I thought about that recently. Of course, that comes from the book of dad jokes that Zach got me. The family will continue to contribute on an ongoing basis. And I thought it was another good one as well, but we always love knowledge. I love learning. It's a big part of my life as well. But I got a question. And this is for my daughters as well, when should you bring your father to class? I don't know. When there's a pop quiz. So at any rate, just a couple of lighthearted notes just to begin our session as well. So my daughters absolutely love that one. This is what my daughter said last night to one of her friends when we were watching the Bucks game. She goes, "That's what we get all the time." So there's a couple of dad jokes. There's a new commercial for one of those what to watch out for, or how to not be your parents. I can't remember quite who does it, but it's hilarious. And they actually point to me, "That's you." So it's quite funny. It's quite funny. There's a lot of things going on. What topics are hot on our mind? First of all, there's a fireworks shortage. Due to the city's last year not doing so much of the fireworks displays, it has gone through the roof consumer use and purchase of fireworks to make it an all-time high. So there's absolutely a shortage. due to Chinese production and also due to demand. Demand was off the charts. It exploded, if you will. That's kind of a dad joke too. I thought that was kind of funny as you go through, but there seriously is a fireworks shortage as well. There's a housing shortage as well. A couple of things we'll find out. There's a great study, if you will, and I just want to make sure that I mention what it is. It's from a Rosen Consulting Group that showed construction of new housing in the past 20 years is running 5.5 million units short of long-term historical levels. That basically means you've got a pretty consistent need to continue to grow housing just for replacement value as well. There's more that goes on with that. We'll talk about that piece another time as well. But that's a huge, huge issue out there. So is that sustainable? Is what's going on sustainable in housing? The big question we're getting to is the market sustainable? One thing I want to tell you, and I've told you this before, and this is the time to listen, is do not argue with the markets. Don't try to become the market timer. It's too high. I should get out. I should do that. More mistakes have been made timing the market and trying to get out before a correction happens than anything else. Now, a correction is coming. If you think there's correction coming, you're right. We just don't know when, nor do you. The difference is we know we don't know. That's what makes us great investors. So I want to make sure you understand when somebody asks, don't argue with the markets. You may think it's high, but many valuation metrics may not. So don't argue with that. Another big thing out there is people wanting to quit their jobs. They've decided that they will not work with what they're not happy with, or they want to retire early on less. So you're seeing a lot of things occur out there where if somebody had a job or an environment or that they really just didn't enjoy, they're looking for new work. Now, this isn't uncommon. It's usually 15 to 20%, but it's anywhere of upwards of 25 to 40%. I've heard this story several times, but we went to someplace to golf up north here, and we walked in. One of the caddies out front immediately said, "Oh yeah, 2 of our cooks just walked out yesterday," and that's not an unlikely story. 5 or so walked out at the Blue Mountain Club, probably 3, not walked out, but they gave their notice about 4, 5, 6 weeks ago. So you're seeing a lot of changes going on. Some of it is by most of it's not by the employer. A lot of it's by the employee, but it's a lot of shuffling that occurs and probably hasn't occurred in the last 18 months or so as well. So those are just some of the pieces that we've seen as well. Now, what I want to do is I want to hop to housekeeping, if I may, because that's more important probably than all the stuff I'm jabbering about. But I wanted to at least give you some of the ideas that we first have seen here. There's a lot more than that. But it's interesting. Every 2 weeks, you might think, oh, what are you going to find to talk about in 2 weeks? I actually find that about every 3 days, we've got enough to fill up a program. So we're going to probably start doing this daily or every other day at some point. We're not going to broadcast it. We're just going to do it internally so we can get all this stuff out. But no, there's a lot of great stuff we find for you on a constant basis. So with that, I would like to bring, for housekeeping, I'm going to guess it's Peter Nordenberg.
Thanks, Chris. Good morning, everybody. Just a few items to go over this morning. First of all, this coming weekend, July 9th and 10th, is the Gathering on the Green community event at Rotary Park, which is just across the street from our office here in Mequon. So that'll be a very fun time if you're able to attend. Next week, Thursday, July 15th, is Lisa Sheridan's birthday. So if you have an opportunity, please wish her happy birthday if you can. Wednesday, July 21st, is our next bi-weekly update. The 21st is also our next internal professional development day, which means we'll have some limited office availability. And then finally, Thursday, July 22nd, is the next installment of our Health and Wealth webinar series, where Michelle Norris will be discussing how to decrease inflammation and what's currently in season. So that's all I have this morning. I'll kick it back over to Chris.
Thank you, Peter. I forgot to ask you, what are you grateful for?
I'm grateful for the time I've recently had with lots of family and close friends, and the ability just to spend time and see people again as we return back to a little bit of normalcy here. So just time with others.
And returning from San Diego as well. That's awesome.
Yeah,
the weather was perfect.
It was a very nice birthday week celebration. So thank you again for everyone who reached out and wished me a happy birthday. I really appreciate it.
Absolutely. Peter is 27. So
just add a decade.
Well, maybe, but still, it's kind of funny. I always like to kind of set people back to where that age was. Now, thank you very much, Peter. I really appreciate it as well. Before I get to the markets and Zach, and he's going to give us a bunch of wonderful, popular, great data that's going to be super informing and interesting. First, I want to go to something kind of mundane and an idea I've been working on for a while. It's not perfect, far from perfect, but it's an idea that hit me. Sometimes it'll happen when I'm walking or something else or going up and down the hills of Concordia, but this one hit me. And I don't have it perfect yet, but I look at this as there's an hour in your community. Okay, think about this. There is an hour, O-U-R, in your community. So maybe we've been a bit more selfless. Maybe what's occurred has kept us together. But I got to make no mistake. We as human beings are made to be together and work together. And community can be 4 or 5 people. It can be 1,000 people. But the key is when you look at that, our community includes you. And that's important to know. You have to get together with other people. What makes a great place where you live, be it your home, be it your neighborhood, be it your city, is you and getting together with other people and having the collisions and going out and doing things you're uncomfortable with again. So I just want to say, one of the things that's really been beneficial to being outside is seeing all sorts of people and having those collisions again, having the conversations that are random but very important in life. It's energizing. It makes you think. You also are giving a great gift. Remember, I said before, one of the great ways to help people is to ask them for help. Let me flip that around. One of the great gifts you can give to someone is ask them for help. It's a great thing to say, can you help me with this? And people are more than willing to do so, and you're giving them the gift of being able to give you something. But there is a you in our community is an extremely important statement. I'd love to explore that more, but it's been hitting me lately and it's been resonating. And when those stick, I bring them to you. At any rate, I wanted to make sure, get out and enjoy that if you're comfortable. If you're a little bit uncomfortable, still get out and enjoy that. So with that, what I'd like to do is bring the most riveting section we have, and there's a ton going on because stuff is all over the place this last 2 weeks or so. But actually, we'd love to have Zach give us an update on what's going on in the market, Zach.
Thanks, Chris. Maybe the most riveting section, but not the most riveting presenter, of course, right? So,
It's Ken.
but end of quarter is a very fun time for us as a team, just because we get to pour over all of the data that comes out as far as what's happening in the markets, what's happening in the economy, and really pour through it together. And Ryan on our team went through, gathered all the data for all the funds that we really track and use in our core portfolio, and are going to really compare and see how they're doing and make sure they're doing what they're supposed to be doing as well. So it's a great time of the year for us to review. As far as the markets go, the S&P 500 is up 15.56% on the year. And one stat that we heard recently is that the best 12-month returning period for the S&P 500 in the last 30 years was March 31st of 2020 to March 31st of 2021. Who would have thought on March 31st of 2020 that the best returning 12-month period would occur the next 12 months? I know none of us did. And just
or Zach, that it would have occurred before you were born. Sorry, I just had to throw that in there.
And it's just a great example, and a congratulations to you as well for what Chris mentioned of sticking to the long-term plan. And we have a great slide in our review that is part of our review packet now that shows how detrimental it is to miss the one best day. And in the chart that we have, it's in the last 50 years. So congratulations to you to stick through that and to take advantage of the best 12-month returning period for the S&P 500 in the last 30 years. The Dow Jones up 12.97. The NASDAQ, which is more heavily weighted towards technology, up 13.77. We've been really talking about small caps a lot over the last 6 months. The Russell 2000 is up 15.87 on the year. Growth 7.56 and value 23.24, which we talked about last time, how it's been extremely good returns for value, but since June 9th, down 8%. What do we talk about? What happens very consistently, and a mistake that investors make? Oh, value is going up. I'm going to sell out of what isn't doing as well and buy more value because that's doing better. They would have just lost 8% if they did that over the last month. Just another learning to stay diversified and never try to time or try to jump to certain things that are doing better. International up 7.30. Emerging markets lagging a little bit behind compared to the other assets is 4.11. And real estate, one of the worst performers for 2020, is actually up 22.74%. A few things of note that we saw when we poured through all the data through JP Morgan's Guide to the Markets and a few others is that value is still undervalued relative to growth according to history. And the top 3 sectors year to date are energy, real estate, and financials. Why is that really interesting? Because 3 of the bottom 5 worst returning sectors for the last 3 years: energy, financials, and real estate. So another great reason to stay diversified and never try to time. A really interesting fact that we recently heard from Dalton University on a study of pension funds is that 94% percent of the return that the pension funds receive was due to the asset allocation, not the specific investments that they chose. Extremely interesting when we took a look at that one. Just real quickly on the fixed income side of things, the 1 year 0.09%, 5 year 0.86%, 10 year 1.43%, and the 30 year 2.05. Not much changes in the last 2 weeks in fixed income side of things. And what we're really finding is it's very hard to find yield above 2.5% unless we're looking below investment grade, which is also known as high yield. Two really quick facts that we saw as well is that 113 companies held initial public offerings last quarter, which is the most since 2000. And we also had another company reach $1 trillion over the last 2 weeks as well. In August 2nd of 2018, Apple became the first $1 trillion company, and now Facebook has as well. So we have 5 companies over $1 trillion, Apple at 2.39, Microsoft 2.10 trillion, Amazon 1.87, Google 1.72, and Facebook is the one that just went over $1 trillion in the last 2 weeks.
I think they get a prize for that, don't they, Zach? I'm just kidding. I'm just kidding. And did you mention as well, I think 2000 to present, the return is only 7%. So if you look at that, according to history, the average is around 10. The market's still catching up. And this is from 2000 to today. That's 21 years. So a bunch of interesting points. There's more facts and data on this than we could ever do. But I know Zach brought up a bunch of great points on that as well. So I think it's amazing. By the way, there are fewer companies than there were 20 years ago as well in the market overall. So the 113 companies coming public doesn't oversaturate the market. There's actually many, many fewer companies, probably by 1,000 or more than there were back even 20 years ago. So I think that's a good one as well. One thing I wanted to mention before Ken gets into some incredible planning ideas that will change your life is, recently you heard about the guy who won the Nobel Prize. He's the guy who invented the knock knock joke. Anyway, Mr. Flannery, please bring us some things that we can plan on. I know that there's some incredible questions about the Biden tax laws and how they will affect them. And I love when people ask those questions, especially before there's any law. So you can answer all the specifics, right, Ken?
Yeah, that's right. I mean, they're all proposals. They're all speculation. There are some things that have been laid out. Again, will those take place? No one really knows right now, but we do get quite a few questions on what you probably hear about the tax proposals. What we hear right now is increased tax rates. We hear increased capital gains rates. Will these affect me? Will it affect my plan? Will it affect our planning that we do together? And for some of you, the answer is yes. I'll show you a couple slides here, very high level. The Biden proposals are really targeted for $400,000 of income and up. When you take a look at the federal tax bracket going up here. So I'm going to show you a quick slide here, just to keep it very high level, but hopefully I can show you one here. Let me see. This is actually capital gains I'm about to show you. Now, this is Biden capital gain proposal. Again, a capital gain proposal, as far as the increase in capital gains you may pay, is really for $1 million of income and up. So will it affect some of you? Yeah, it will affect some of you, but for the majority of us, it's not going to affect a lot of us. But when you look at this and you combine it with the state capital gains, local tax, if you will, you can see that the plan that Biden is really laying out will put us at the top of the bracket if you're making $1 million or more, as far as the world goes. I mean, yeah, it's a little scrunched there. I tried to get it on one page, but the United States really is at the top there. Then comes Denmark, Chile, France, Finland, Ireland, Norway, and the Netherlands down the list there as far as top countries around the world paying top rates. Now, I've also heard that at the bottom there that my wife has been to Switzerland in the past. My wife has been to New Zealand there. Those are some beautiful countries, and they really don't even have capital gains tax. So maybe something to think about as your retirement plan grows and evolves on where do we want to live, right? Do we want to live in Wisconsin? Do we want to live in Florida? Do we want to live in Switzerland? Do we want to live in New Zealand, right? All things that we are contemplating in our minds. The next one I'm going to flip over to is, did you guys see the change there or not? Or is it still on the same? Did it change?
Yeah. Yep.
Okay, so this is the current tax law right now. So this is the 2021 federal tax planning guide that we use. Again, you have to remember, some of this is going to affect you and some of it's not going to affect you. Here's our philosophy at Gentian Financial. We want to make sure that we optimize your tax situation. We will work with you and your accountant on that. Again, it's not what you make, it's what you keep. That's a huge mantra of us when we look at the planning of your scenario. It's not what you make, it's what you keep. And so when you look at the tax brackets over on the left-hand side here, what you're going to notice down here is the 35 and 30%, 37% brackets. That's really what President Biden is outlining right now. Those brackets are most likely, again, it's a proposal, but if the proposal becomes true, which you never know, those are going to go to the top rate, which is basically 39.6. That's really what he's talking about right now. Now, there'll be some trickle down effect, most likely, but these are proposals. Some of it will affect some of you, some of it won't. So I just wanted to bring that to your attention really quickly, as I do get a lot of questions like that in the meetings that we review with you as well. I saw a great quote. It's kind of what Chris mentioned. It's kind of what Zach mentioned, but discipline is remembering what you want. Think about that. If you want a retirement, if you want a 30 to 40 to maybe even 50, maybe 60-year retirement, what is the discipline that it takes to have that? What is the discipline? And the discipline is really staying the course. The evidence shows no other results that are better than staying the course, typically. It's very difficult to time the market. It's no different than health, remembering what you want. It's the discipline of waking up, putting your tennis shoes on, and getting out there and getting after it, right? It's the discipline of remembering what you want. So just keep that in the back of your mind when the markets are in our favor, it's wonderful. When they're not in our favor temporarily, it's not as wonderful. But that discipline that keep us going, to keep us marching forward, really is the answer. So lastly, during reviews, we are going to ask you about how is income. We're going to ask you about how things are going for you guys. Most of you are saying income is pretty good right now. So it's great to hear all the positivity that we're hearing. We want to optimize your Social Security. If you haven't started taking Social Security yet, we are going to ask you some questions about, do you need income? Do you want income? What does it look like for you and your spouse or significant other? We're going to ask you questions to help you optimize when to take Social Security. It's something that we really want to help you out with. Medicare planning and health insurance planning, of course, those are always the topics that come up around, retirements, and really trying to figure out our retirement budget is what is our healthcare cost going to look like, whether it's Medicare or health insurance before 65. So those are really the points that I wanted to touch on today, and I look forward to seeing all of you very, very soon.
Thank you, Ken. So a big question I have for you right now is, how are you doing? How are you doing in retirement? Have you accomplished what you've wanted so far? Is there more that you want to do? These are the core questions. Numbers are great, but your life is number one. We understand here at Gentian, we plan it. That's a lot of what we talked about so far, but you also live it. It's the quality of life. It's the quality of things you want to do. It's the dreams that you have in us, helping you be your dream architect or helping you realize those as well by providing you with the finance. And then more importantly, for many of you, you have a plethora, you have more than you need. You want to give it. Hence the three terms we have, Gentian retirement, is plan it, live it, and give it. So the question I'm asking you right now is, how are you doing on the live it? Would you grade yourself an A, like you've really been, this is what I wanted to do and exactly what I want to do? For most, that's not been the answer. When you look at all sorts of resources, all sorts of data, people actually find that they do a lot less than they were hoping that they would do. They don't contribute as much to maybe some of the charities as far as their time, attention, resources, or even money, if you will. So I look at this as a time to take a moment and look at, grade yourself on your retirement. How has it been so far? More importantly, this is the beautiful thing I've learned in Strategic Coach and the 6 or 7 programs I'm in. We do pretty much grad school every single year to look at what is important. And I would say, write down what it is you want to accomplish from here. I don't care if you're 94, if you're 34, if you're 54. Magic happens when you write it down. Even better, write it down and tell somebody important to you. Preferably not your spouse. It can be your spouse if you're married, but tell someone else and have a conversation about it. Magic things occur when you put them down on paper. So that's a big part of what I wanted to do here, is let's open this up, because it is, the numbers are important, but I know your grandkids. I know you want to travel to Colonial Williamsburg. I know you guys want to be in more parades. I know that you'd like to, see more of the world. I know some of you'd like to just stay at home and not travel. Some of you'd like to write a book. Some of you like, this is a chance for you to do that. Tomorrow is the first day. Let's make that better. Today is the first day. Tomorrow maybe is the first step toward getting in shape. Take the first step out. To some of us, we have health concerns, and those are, we get those as well. But get your story, write your story down. What is it you want to actually accomplish from here on out? So enough with that, but that's something that kind of hits me from time to time. The last thing I want to talk about today is risk. Risk is typically seen by some people as the fluctuation in assets of up and down. Typically, they're referring to the down. That's what they call risk, right? But if we've got a great long-term trend and these are temporary up and down fluctuations, what risk are you really looking at? Now, let me bring this up to you. I'm going to bring you up two risks, one of your investments, one of your retirement plan. That's planning with us, your entire life plan. And oftentimes when you get extremely conservative, let's say on a 10 scale, you're a 2 or 3 for risk on your investment scale, you ratchet up the risk on your retirement scale to an 8 or 9. These two scales are often opposite because what we need is we need returns that not only beat inflation, provide you taxes and income. And when you put those together, let's say it's 3%, 3%, and say 1 or 2%, you're looking at 6 or 7, 8, 9% you might need for your returns long term to sustain your money. Are you going to get that with fixed income today? No. The answer has historically also been no when we go back and look at asset classes. So don't mix up your retirement risk scenario, which is if you're extremely conservative, it can be very detrimental. If you're extremely aggressive, you're a 10 on the 10 scale for investments, it also can be detrimental. But if you're in somewhere in the 6, 7, 8, 9 category, you actually find that to be a fairly ideal spot. And to many of you, that's where you've lived with us. To many of you who've been here for many, many years with us, that's where you have lived with us and gotten through those ups and downs successfully. But I do want to say there's a misnomer on risk. You got to look at what kind of risk you're looking at. Risk of jumping everything into Bitcoin, very, very, very high risk, right? Chance of being detrimental on your investment side. Risk of 100% going into super short-term, very low volatility investments right now for the next 20 or 30 years. There's a very high risk in your retirement plan of you running out of money, and if not, purchasing power. So you need to beat inflation 3%. You need income probably 3 or 4%, and then taxes if you need some of that on top of it as well. You're looking at 7, 8%. So just always look at that. We'll discuss it. Ken, Zach, Peter, everybody on our team, Mike, Ryan, everybody, even everybody on our team, I should say, knows it very well. But we want to make sure we let you know this as well. So before I go, it's about 9:30. I do want to give you some of the tech in the Future Loop. There's 3 things I saw this last week or so on Future Loop that's kind of a crazy, but artificial intelligence is beginning to infect all areas of your life, like televisions. You're starting to see televisions using AI to give you a better picture. If you're looking at an area that's not going to be infected by artificial intelligence, you're probably going to have a hard time finding that other than the good old pen and paper. So I've got something over here that I can actually write on, and it puts it in the digital format. So I actually can find that writing is actually being infected by artificial intelligence. Why do I say infected? Because it's an interesting term and it actually colors what we're talking about. If I say enhanced, if I say it's going to be benefited by, you see it in a different way. Notice the little words we put in there. I say infected. You go, oh my gosh, that's probably not good, especially after we've just been through COVID. So when I look at this, artificial intelligence is really beginning to proliferate, and it's beginning to think for itself. One of the biggest things we didn't talk about here is ransomware. This last week, we had one of the biggest ransomware items we've ever had. I've heard stories from all sorts of people all over the nation, friends of mine who have ransomware. What is it? They take hostage your server, your data, everything that you have, and you got to pay them money for them to release it. It's basically like piracy on a scale of encrypted, or they'll encrypt everything you have, and the only way you can get out of it is if you pay them the money you need to. Fortunately, our gentleman here who helps us with that, we've got Fortinet, we've got 2 or 3 or 4 different networks covering us, said it's nothing that we've been working on, and we have 2 firewalls as well. So it may be frustrating to log into, but it's extremely safe for us to use with your data. Doesn't mean we're perfect, but we have a ton of let's call it concentration on your security as well. Another one is you'll appreciate this. There's an Israeli cultured meat factory to churn out 5,000 bioreactor burgers in a day. So it's an Israeli cultured meat factory. Cultured meat factory, what the heck is that? They're basically making meat without cows. Now, do you like the term bioreactor? Heck no, nobody does. But that's essentially what they're using to make meat by culturing the cells from perfect animals that they find. They can use this perfect cell, they can culture it, and it's creating the exact same cell, which is meat, and they can create 5,000 burgers in a day. So look for that to begin to see. Now you're going to start looking at culture beat, kind of like California diamonds, where they're actually made versus made in nature. We're beginning to see the same thing occur with meat. IBM shows an advantage of quantum computers in real life. This is the first time. Quantum computers are something that borrow energy from another dimension, and they're supposed to be multiple times more powerful than our existing computers. China just yesterday just said they have supremacy in the fastest quantum computer in the world. It's kind of like the nuclear arms race. When you have 100 million nuclear weapons, what good is it? Because anyone shooting them off is going to kill the whole Earth. It kind of happens in this way in quantum computing now as well. But IBM just showed in real life how they can use it and how you can use it. The last one is the Japanese have a new cancer treatment with a beam of light and antibodies. They shine a beam of light on the spot that you need for cancer treatment. They run the antibodies through your body, and it only attacks the position with which the cancer is occurring. For a lot of you who've had chemotherapy where it kills all the good cells, there's incredible stories coming forward. That's just a few of the different pieces, if you will, for the future loop in technology. If you want to find hope, I always like to redefine. Everything I just said is about hope. There is hope for a better world. But in hope for a better world with technology, there's also the fear of what technology can do to us as humans. So always have both of those in balance. As Ken likes to say, there's a fine line between good and evil. I'm actually going to get him a shirt with a line just down the middle, and it's going to say, "This is a fine line." That's just an internal joke, but it's quite funny, at least to me. So what I'd like to say, Gentian Retirement, we're here helping you plan it, live it, and give it. We appreciate it. We hopefully have a wonderful summer ahead of us here as well, between the 90s and the 60-degree weather that we have, some of the rain. It's just been a beautiful summer for us so far. But on behalf of the team here at Gentian, I'd like to say stay safe, stay positive, and be grateful. Thank you for your attention and time today. We appreciate it.